Welcome to the market analysis for June 2017. My name is Barney Hawkins and I'm Investment Director at True Potential. I'd like to look at how markets have performed over the last month and also examine some of the key themes affecting our fund managers at the moment. In the UK, the market has performed strongly, up over 4% this month and nearly 8% so far this year. The indecisive result in the general election has not helped uncertainty around the strength of the economy, with signs that consumers may be drawing in their horns. House prices, while still growing, have slowed, and this caution is also reflected in a decline in new car sales. Responding to this cooler economic climate, Mark Carney, Governor of the Bank of England, said he thought it entirely possible that interest rates may not go up before Britain formally exits the European Union in 2019. This idea of rates being lower for longer boosted equity markets, but undermined sterling, with the pound down about 0.5% against the dollar and off over 3.5% against the euro. In Europe, the election of Emmanuel Macron as French president has quelled fears over perceptions of a rise of the far right across the region and sent a powerful message to France's European partners that the country remains firmly behind the European project. Whether Macron will be able to implement many of the reforms required remains to be seen, but he has without doubt timed the start of his premiership to coincide with a period of economic resurgence across the bloc. Our fund managers have been increasing exposure to Europe, and this has paid off, with European equities gaining 1.8% over the month, the strong euro enhancing that return to 5.5% for a UK-based investor. In the United States, Donald Trump continues to dominate headlines, not least with his dismissal of James Comey, head of the FBI. There's a sense of unease about his administration, and the dollar has retreated to its pre-election levels of 8 months ago. Nevertheless, the large tech giants, Apple, Microsoft, Amazon, Facebook and Google, have continued to spur the market on, and excluding their heady valuations, the rest of the market is on a much more modest rating. This gives our direct equity stock-picking managers plenty of scope to find attractive investment opportunities. Over the month, the US market picked up 1.4% or 1.9% when converted to sterling. Finally, away from equities, the combination of broadly positive economic indicators, together with a sense of caution around geopolitical events, proved beneficial for bond markets around the world. Sterling's weakness increased the return of 1.9% from global bonds to nearly 2.3% for UK investors, while Mark Carney's reassuring comments over the pace of any hike in the UK's base rate helped lift gilts by 0.3%, with corporate bonds gaining nearly 1% over the month.